Hey everyone, Bob Kendall here doing a quick update. I'm still on the road. This is for the week of August 15th and beyond. Since many of you have the indicators, it's going to be easy for me to set you up what to look for as the week goes on, even in my absence. So let's get into tonight's video. Okay folks, before I get into tonight's video, let's make sure you subscribe, like, and share these videos and hit that notification bell. I want to talk just a bit about what last week was about. CPI came in better than expected, meaning lower than what the expectations were. Month over month was better than expected, and that just got everybody excited and started believing in the peak inflation story. That was a big deal. Even though the Fed continues to come out every time they're in the public saying that we're going to keep raising rates, that dialogue is going to stay out there. I told you that the inflation scenario is going to be what dominates what they're saying. Markets are seeing beyond that right now. And there's some significant things going on, in my opinion, from the standpoint of some shifts in the marketplace, which I'll try to get into so that you folks are set up for this coming week. Now, just want to warn you that I'm doing this on a portable studio and doing my best to just get some content out to you. So I had the weekend to prepare, so let's talk a little bit more about what's going on. Last week we've seen a continuation, S&P up 3.3, Nasdaq up 3.1, Russel up 5% last week. One of the things I want to talk about, we are coming very close to some of the targets that I discussed that seemed somewhat realistic when we were down in the 37 handle, and I was talking about the quarterly rebound that I was expecting, and we were going to trade up into 42, 43 handle, and then I've fine-tuned that a bit more of going to the 43.20 to 43.80. Well, we're at 42.80 all of a sudden, and we're very close to these things. I'm going to show you exactly what the setup is and what you're going to need to watch for. Now, a lot of you already have the indicators, so I'm going to give you in that section some really key things to watch for on how the indicators are likely to react, especially on the daily ones. There's some very significant patterns setting up. Let's talk about a few things that are coming out this coming week. On Monday, we got Empire State Manufacturing looking at 8.5. We've got the National Association of Home Builders numbers coming in at 56. I think these numbers are going to miss. I think housing's got a lot of issues here, and I don't see that changing anytime soon. Housing starts on Tuesday, so there's a lot of housing information coming out this week, which is starting to be the leader, at least for the weakness, and that's just the opposite of what it was before. So it was the strength in the market, now it's becoming the weakness. There's basically a rotation going on in the economy, which will be a theme that I'll be talking about over the next several weeks. Also, the permits will come out, and those are going to come in at 1.63 million. That's also going to be most likely even, maybe even a positive number. That from one reason or another, the permits are still staying fairly high. The industrial production expected to come in at 0.5. Capacity utilization will be significant. It's expected to come in at 80.4. So we'll see how that comes out. I think if that number comes in under 80, that could be a sign of weakness. But just remember, right now we're in a mode where bad news is good news. That means the Fed's not going to be as aggressive, and more likely that we've set the low in the markets and that interest rates aren't going to spike. But I will talk to you about this in a few minutes. I think there's some changes coming on interest rates, crude oil. Some of the things that have been coming in a little bit are looking like they're starting to turn. I'll go through that in the details in the technicals here in just a few minutes. Wednesday retail sales, and then the FOMC minutes will be out on Wednesday. That's likely to be impactful to a point. I don't think there's going to be a lot there, but folks are at least going to read it and probably see some sort of reaction when the news comes out. And then on Thursday we have the claims, 265K. Those numbers have been rising over the last several weeks. I think they're going to continue to rise. I don't see anything changing there. Also, there is continuing claims coming out, 1.428 million. That number is rising. I think the employment situation is going to continue to flatten out. The last thing I want to talk about that's coming out next week is the earnings. Earnings are 1,407 earnings reports coming out, significant earnings coming out, but for the most part, we're into that meat part of the earnings season. And all of the earnings, you can go back virtually forever. Maybe 2001, I remember they were bad in 2008. But all of these earnings reports that are estimated are coming in better than expected because they're lowballing all of the estimates. And they do this normally anyway. That's the only thing you can figure out because they can't be that bad at forecasting because none of these guys should have a job at the way they forecast. So it's got to be an intentional undershoot so things come in better, and that will set the tone then for the market sentiment improving or stabilizing, whatever. But I guess I'm suggesting there's a bit of a conspiracy, but it happens every time. I talk about this every earnings season for decades, folks. So you folks have just known me for a couple years, but this has been an ongoing theme. There's 1,407 of them coming out. I expect that we will see a better than expected on balance, and there'll be a positive tone around these numbers. It's also about guidance, forward looking, but that's not likely to do much more than what we've already seen so far. We've already had a material amount of things come out. I think over 3/4 of the S&P has reported, and you can see the action in the markets over the last several weeks. But I believe we're going to see a bit of a shift coming in. The last thing, there's a lot to talk about since I haven't talked to you folks for a better part of a week, is this new act that they put through. This is the Inflation Reduction Act. You know, when they put a name like that out there, we are screwed. Actually, it's not anything about inflation reduction. It's the opposite. It's another stimulus bill that's got all kinds of stuff packed into it. $800 billion in total, $400 billion in things that they say are going to help the inflation. It's not. This is all political right now, what you're seeing from the administration. They know that they're in trouble in the midterms, and they're just packing everything they can. You know, they feel like this is a win for them. They've got all this stuff that they're out there pushing, including the next thing you're going to hear about is the student loan forgiveness. That's just another deal to pack so they can try to get groups of people to go, well, they really haven't done very good, but I'm going to give them a pass. They did eliminate a lot of my debt. So this has got to, we'll go ahead and go with them. That's the card I think they're playing. I think all this is political. Some of it actually makes economic sense. Most of it seems to be motivated by other things, which is always the case with the government. It doesn't matter what side of the aisle or anything they're on. That's what they all do. This is just part of the way it works. So I'm not calling anything out other than the fact this is the way it works, especially when you feel like you're coming into a midterms with weakness. So I think in general they're going to try to keep the news flowing very positive the best they can. They'd love to see the market trade higher. There are a number of things that are pointing that the market could trade higher, which I'll go through in the technicals. I'll get you well set up for this coming week. So let's get into the review of the database, and we'll get into the technicals. Reviewing the Wavetech database, it's very interesting to notice that we did not get a substantial amount of traction after last week. We did move up. We had on the weekly intermediate database, we did have 712 buys versus 93 sells. So we did uptick a bit from 28% and change to 31.58 bullish. This is still not material. You know, if you've watched this channel, 42% on the database tells us we have a sustainable trend. So we have not made it to that level yet, which is a concern as we go forward, especially as you'll see here in a minute. We're coming up on some significant resistance on the weekly charts. I'll go through all that here in a minute in the technical section, but the database definitely is showing us that there is some improvement and we're getting a good rotation. A lot of the stocks that we've seen come in have been some of the larger cap stocks. You look at the sectors here. We now have 4 sectors long: basic materials, conglomerate, healthcare, and services. And there's no new sectors coming on at all. A view from the sector viewpoint, it's still a very narrow rally. It has not broadened out to significant sectors yet. I'm watching this very closely, looking for some major rotation that we'll be able to play. For now, there's really nothing there from that standpoint. Going over to the daily database, what you're going to see is an interesting configuration. We are now up to 86.07%. Now, I've seen this get up into the 90 percentile range. I'm surprised we didn't get more weekly buys to come out of the system, but we did move this up quite a bit. We had 376 buys versus 83 sells, pushing it up towards some extremes. Like I said, 92 is typically an extreme. That's an amazing amount of traction on a short-term database, so we can continue to see that grow. I believe as long as it stays above the 68% level, the markets are going to be able to stay in a somewhat of a positive tone. We may see some correction come in, some backfilling, but as long as 68% holds on the daily database, we should be in a place to see the markets rotate much higher. But there could be some hesitation. Sometimes that'll take anywhere from 3 to 6 weeks or more. The first market that I'm going to be discussing tonight is the S&P. We are getting very close to some of these numbers that I've been talking about. We're now traded up toward the 4,300 level. We've had so far a high of the 4278. We're looking at the potential, just looking at the market grid for today. We're looking at R1 4299, R2 4319, so right there's your mark, what I've been talking about. And the extremes, there's been quite a bit of volatility, so we have an expanded volatility range expected, and we could see the market move up to 4340 would be an extreme. I think that's not likely to happen today. I do expect to see S1 R2 for today, S1 4262. That would be about the maximum of the downside. As always, use these numbers as a measure on the pivot, so make sure you note these numbers here on the market grid. Let's go over to the weekly chart. Taking a look at the weekly chart, you see we're coming very close to the 40-week moving average, which is currently at the 4294 level. The 200-day is at 4319. You can look at the market grid here. Also, R1 weekly is 4320, 4360. Everything's pointing to probably peaking out here in the next couple of days. The thing to watch for here is two things. Those of you with the indicators, I just want to point this out. You want to watch, these won't change much, but you want to watch the PPMs if they cross through first and second derivative on the weekly. Right now we're still seeing an expansion on the PPM1 on a weekly, so that tells us that we're not likely to get a giant reversal off of this number, but we could see some resistance and start to trade somewhere between the 4320 objective I've been talking about and maybe as low as 4260, 4244 this week as we go through it. I don't see any major reversal. Going through what I talked about earlier on as far as the news that's coming out, there's nothing that I can see that's going to be super impactful this week. The earnings, like I said, are mainstream, middle of the road. A lot of companies, there are some major companies, but for the most part there's a lot of mainstream companies coming out. We may get a better feel for some of the economics as far as looking in the rearview mirror, but going forward we're going to have to watch for a number of things. But the PPMs on a weekly basis still remain very positive. PPM 2 and 3 are still negative, so this is suggesting there will be a fair amount of resistance here. Most likely the extremes that we could see would be 4095 would be a low end of the pattern. Basically we'll call it 4100 would be the extreme. I don't see us getting down to that level. That's a long ways from here, but just expect to see the potential of a sideways range to set up. We could see the bottom in the range around 4100. That would be an extreme. If we did see a pullback, that would represent a buying opportunity based on whether these ppms can stay above first and second derivatives. Now I'm going to go back to the daily just for 1 second here. This is going to be one of the key things to watch as far as the ppms go. It's actually very significant that we see ppm 3 accelerating like it is, but ppm 2 is stalling here. We are at trend level, but ppm 1 and 2 are stalling. We're stalling right under that 200-day moving average. So any spike up early in this week probably results in a pullback into these moving average. As I said earlier, maybe back into 42.62, 42.40. Those should be ranges. Unfortunately, I won't be able to do any more videos for the balance of the week. I'll try to do some things on Twitter when appropriate, when I can, but that will be the primary thing that I see going on here. Next market I'll cover is the Nasdaq. Nasdaq is a little bit further away than the S&P is from its 200-day moving average. It's currently at 14,035. I've talked about this 14,000 handle a number of times over the past several weeks, so expect to see it still move toward that level, but look for a rejection. But look at the ppms here. They're really struggling, just like with the S&P. We're seeing ppm 1 is completely flattened out. It's in trend mode, so is 2. We're starting to potentially cut through the first and second derivative on ppm 1 and 2. ppm 3 is still expanding, and that's part of the evolving trend. So even if we get some sort of correction here, a rejection somewhere around the 200-day moving average to 40-week average, that's where we're likely to see some reaction back, and then we should set up some sort of buying opportunity. What's going to be interesting, those of you who have Wavetech, then you can follow the database. Look for that database, as I mentioned earlier, on an overall basis to stay above that 68% bullish number. As long as that goes on, that should be good. If you're a follower of mine on Twitter and you have access to Wavetech, why don't you post what the numbers are every day when you see them? That would be probably helpful to the community. As I look at this configuration, it's very similar to the configuration that we have in the S&P. Quick look at the weekly patterns. There's a couple things here. We do have a number of things going on. We have the 40-week moving average coming in right now just below where the 200-day is, but it's coming in right now at 13,891. So figure the target, we'll call it 13,900 to 14,000 on the upside. But what's interesting here is on the weekly, you'll see that the Nasdaq is just screaming. We're still seeing an upward acceleration. There's still negative ppm 2 and 3, just like in the S&P. Similar configuration, but that just tells us that we may see a bit of a rejection off of the 40, but most likely we're going to stay sandwiched between the 21 and 40 simple moving averages on both the S&P and the Nasdaq. Next market I'll cover is the Russel. We're going to start with the weekly because the Russel is actually trading right at the 40-week moving average right now. 1980 closed at 2012, which is above that level. I've talked about this in the past, that the Russel still is somewhat of the leader, even though it's underperforming the S&P and all that, but the configuration suggests it's doing things before the other indices have done. And that's one of the things that led me off the low, if you recall, if you've been watching the channel, is that built expectations for the other indices to follow through. So we're seeing a very similar configuration on the ppms, but they're slightly stronger here. The fact that we closed over the 40 period moving average on the weekly, as well as I believe the 200, will verify that in a second. But this is an absolute, still very bullish setup. And I'm not going there yet, but I would tell you that we are starting to build a bit of a scenario on these indexes that we could rise above the targets that I've talked about. Hopefully what I'm talking to you about tonight will hold this week. When I come back next Sunday night, we'll be able to see exactly where we are, maybe see what the measurements are as far as expectations going forward on all of these indexes over the next couple months and going into the end of the quarter. Quick look at the daily. As I mentioned, we most likely closed over the 200-day, which we have. We're looking at 200-day at 1967. As I mentioned, we closed at 2013, so we're above that. This is also the RTY, which is the Russel futures. Next market I'll cover is the treasuries. This is the daily chart. One of the things I mentioned in the opening comments is that I believe that there was a shift going on in the markets. And this primary place, and I've talked about this before as well, is the 10-year and the crude oil look very similar in their chart formations. They seem to be responding in similar fashions. But those are the two markets that I'm seeing the shifts in. But let's take a look at the PPMs here. We're starting to see them turn up. PPM 1 is clearly in an uptrend. The resistance on the 10-year is going to be around 290, but I think most of the story is being told here on the weekly charts. We're starting to see the 10-period moving average try to turn back up again. The 21, I've mentioned this several times over the past multiple weeks, is that the 21-period moving average is going to act somewhat as a magnet. It's at 2.87, and we went out at 2.849 on Friday, and I'm looking at that number maintaining, but we're also seeing the PPMs on the verge of turning back up. If the PPM 2 turns back up through its first derivative, that's not going to happen. This is a weekly chart, so that won't happen until next week or the week after that. But if that happens, then we're going to see rates move back up to probably 310, 316 is a lot of resistance there. So we'll probably start to put an average range of around 285 to 310 on the 10-year. It's likely to be the range of what we're going to get. That's probably going to trigger a stronger Dow. Maybe we'll see a backfilling on gold. I'll talk about that. I'm not going to cover the Dow tonight. I just don't have enough time. So we'll get through all of this stuff the best we can. But just know that we're looking at the upper band. We're looking at the upper band now for the 10-year, 285 to 310. Next market I'll cover is crude oil. Crude oil has very similar configuration. We're trading more between the 40-week and the 21-week. The 40-week at the moment is at 88.15. The 10-week is at 97. So I've been talking about a 95-110 range for a while. Now we're setting up a new range, which should be, the bottom should be about 85 to 105 is going to be the upside, maybe right at 100. So that's a really expected range here. We're not quite seeing all of the PPMs turn up on a weekly basis, but we're very close. And those of you that are aware of this ETF hack, the XLE ETF hack, we've actually went from about 12% invested in that portfolio up to 50%. And I think over the next couple of weeks, we could see a rotation back into the oil. And it looks like this market at least wants to go back up to maybe 110, 115. I don't see a new bull phase starting here, but I do see stabilization at least at that 85 to 100. The possibility of going as high as about 115 on the upside. I don't see it getting much above there or starting a new trend. We're not really in that configuration. We're more in a consolidation. If I brought up the monthly chart, you could see that we're really in this monster sideways range, and we're going to stay there. I don't see oil coming under any pressure much under 85 other than a moment spike. There'll be plenty of demand for oil down anything under 85, so don't expect that to happen. The final market I'll cover tonight is Bitcoin. Before I left, I was talking about Bitcoin having some upward objectives, which are still valid here. Potential move for a minimum target of 33,868. There's going to be plenty of resistance around 29. So I think 28.29 is probably where we're headed right now. The ppms are attempting to turn up on a weekly basis, and this suggests that we're going to still have an upward bias. Like I said before, Bitcoin really was defying any type of gravity. It should have went down, and now we know it's going up because the great Peter Schiff says it's going to 10,000. So you know it's going to probably double from here if that guy thinks that's what's happening. I hate to troll Peter, but he's never right about much of anything. But the bottom line is, this is a very positive trend that's emerging here, and it's not a negative trend. The negative trend has passed, and the ideas or concepts that many months ago, probably 2.5 months ago, I talked to you about the potential for an 8,000 number. But when we went into this sideways pattern that we see going back for about 7 weeks right now, that probabilities went down the tube as far as that goes. There was no opportunity whatsoever for the markets to do anything of the sort as far as any downside action goes. So that's off the table in my opinion. We should see the market start to move up. It's already above the 10-period moving average. The next minimum target here is for the 29,942 is the 21. I've targeted 28, about 28.5 to about 30,000. Hey folks, this is the end of the video. Thank you so much for being patient while I've been out of town. This is a good thing for everybody, trust me, and I can't wait to get back and get the community cranked back up full again. So thank you again. Remember to subscribe, like, and share this video. Also, make sure you buy the indicators because they will help you a lot. You can see a lot of comments. If you already use them, please comment in this video. So I appreciate everybody watching. Thank you so much. I will see you next Sunday night. So have a great week trading. Good luck. I hope this video tonight helped you a lot. Thank you and good night.